Welcome back, everybody, to part two of this series in Chalkboard Finances. This part two is what I'm calling investing and how to invest or what to invest in. Just getting yourself ready to invest. So, the last video we talked about precious metals, investing in gold and silver. So, another way that you can invest your money is stocks and mutual funds. Yay! So, this is probably one of the more common ideas that people have when they think of investing, and it's probably one of the most popular ways to invest. So, now I'm here just to give information. I don't am not giving any advice on what stocks to pick or anything like that. So you'll need to do your own research. I'm just giving, again, my opinion on the benefits of one type of investing. And so let's jump into that. So some of the pros that I see as far as investing in stocks is concerned would be just the ease of it. In today's world, with all the technology we have, all the apps that we can put on our phone, I would say it's very easy to actually invest in a stock. So what is stocks? What are stocks? It's just you're buying ownership in a company, basically. So you are using your money to buy your share in a company through a stock. Now, one of the pros that I would also say is it doesn't take you a lot of money to get started. There are so many different types of stocks out there that you can basically pick whatever company you want and at whatever price point you are able to afford in the stock. And so in other words, you don't need to, like, for example, when we were talking about gold per ounce is a little over $1,900 an ounce right now. So if you didn't have $1,900 or $2,000, you wouldn't be able to buy gold. Well, you can buy stock almost at whatever amount of money you have. So that would be a pro, is it doesn't take a lot of money to start investing. It's very easy to invest in it. There's a variety of companies out there to invest in, so you can almost invest in any type of company you could think of. The other aspect of that too is I think that a pro is it's very easy to sell. It's very liquidity means if you needed to sell your stocks, you can sell them. So those are some of the pros that I see as far as stocks are concerned. Now with mutual funds, I believe it's mutual funds that where compound interest, like your interest that you're earning, just continually builds upon each other. So that would be another benefit of mutual funds is compound interest. So some of the negatives or the cons that I see with stocks and mutual funds are your lack of control. By that, I mean you have no control over what that company is going to do. You're not the CEO or you're not on the board of directors. You don't know what they're doing on a day-to-day basis. Yeah, you can research and have an idea based on quarterly reports or minutes or whatever. But overall, I mean, you don't get to decide and determine what they're doing. If something negative happens, some negative news comes out about a company, you have no control over that, and that could affect your stock position, the price of the stock. So lack of control. The other thing I would say too that's a negative, it could be a benefit too, but the stocks can be very volatile. Like they can go up and down a lot over the course of a day, a week, a month. So trying to time the market is almost impossible. You have no control over that part of it either. So the stock price is very volatile in comparison to maybe some other types of investments. The other thing too is that volatility. It's just really based on what the company is doing, or maybe there's news or maybe someone famous sends a tweet out about a company, or maybe there's these Reddit reports that are trying to short these companies. That was going on in the news like a while ago with some stocks out there. They were trying to, I don't even know what was going on. But anyway, all this news was just driving up the price of a stock. And so what I'm getting at with that is that you would be trying to maybe chase that news story, or maybe you're buying a particular stock because you heard about it on Twitter or Facebook or a YouTube video or a friend or whatever. And so you're chasing basically emotions, or the fear of missing out on a particular stock. I guess we could also lump into here like cryptocurrencies, and just how volatile that can be, or just all these different types of currencies that are very new, and you're trying to maybe chase that next big cryptocurrency like Bitcoin or Dogecoin. So those types of things, if you're just throwing money at it, hoping that it goes up, you're just kind of, in my opinion, maybe investing based on more of emotions and hoping that that price of that stock or cryptocurrency goes up exponentially. So in other words, it's not really based on like fact or a good track record. Again, not to say that cryptocurrency isn't a good investment, but just because it's so new, we don't know a lot about it, and it could just be that you're driving after those emotions or the hopes that it goes up. So that could be just another potential con against cryptocurrency or stocks. So the other thing too is, let's say that you do buy a stock at a low price. Back in 2020, when the pandemic was going on, the stock market just crashed, and obviously stock prices were very, very low. And so that was a great time to buy. And if you were able to buy stocks at that time, you were able to get in at a really low price, almost certain that the market was going to go back up. And however, if you put your money into all these companies that were at that very low price, and when the stock price goes up, now the only way to get your money out is to actually sell the stock. So you lose your position as to what you bought them at. So again, I would say that's another negative, is as soon as the only way to get your money out of it is by actually having to sell the stock. And now you lost your position, your leverage, so to speak, or the money you had invested in there. You lost that low price that you have. So if you want to buy it again, you'd have to wait for it to come back down, or so again, trying to time the market, it can be hard to do, and it's almost impossible in my mind to try to time the market. I've heard people say it's time in the market is better than trying to time the market. So the more time you are in it, theoretically, you'll have more money over the long run than when you started, just because of the historical trend of the stock market over time. So those would be some negatives that I see with stocks. You don't have control. They can be very volatile. You're just chasing trends or emotions, and you lose your position once you sell it. The other thing too is, when you do sell, you're then going to be taxed on that as a capital gains. So you're taxed on that as well. So like most investments, but again, just another negative. So you just have to weigh the benefits and the negatives of those things. And maybe mutual funds might be a little more stable, because a mutual fund is like a group of all these different stocks. And it's not just one individual stock. So that can maybe give you a little bit more protection with market volatility. So again, you need to do your homework. You need to research specific companies, different types of mutual funds, some of the ways that you can invest. are through like what is it, Webull, Robinhood, TD Ameritrade. Those are just some of the few that are out there that you can easily invest in and get started. Again, I'm not sponsoring any of those, or I mean, those are just potential ways that you can invest in a stock. And but again, you need to do your research, study the company, figure out what it is you want to invest, why you're wanting to invest, how much money you're willing to put up, because it is a gamble. I mean, like all investments, there's some sort of risk involved. So just make sure that you aren't just throwing your money at the wall hoping it sticks, so to speak. You need to do your research, and you need to be willing to potentially lose money in it if you sell. Now, again, it just depends on how long you're in the market, and again, when you sell. So those are my thoughts on stocks and mutual funds. Just some of the benefits I see, some of the negatives I see. So just be careful out there, do your homework, and just take the time to research it. And we'll see you on the next video. Thanks.